welcome to the closing beat, everybody. Happy Wednesday. Got the day right for a change. I hope you're having a good day here so far. This is our closing beat show. Just real simple closing market overview. Let you know how things have gone, good, bad, or ugly. We're financial advisors here at Jazz Wealth, and I almost fell off the stage there. Whoa. So if you are looking for a financial advisor, but you're intimidated by the normal people, suit and tie, leather wingback chairs, and all that, well, check us out at Jazz Wealth. We'll keep us in mind there. Tomorrow we're actually doing we call it Wine and Wealth. It'll be a portfolio overview and a market overview like no one has ever covered for you before. No other financial advisor has gone as deep and as clear as I'm going to do tomorrow. Short class. We'll keep it really simple. And then stick around. I always stick around to answer questions for customers that have them. Anyways, let's take a look at the markets here. On the right-hand side of the screen, you see another positive day. There's some lessons to be learned here. Remember yesterday I said the markets were essentially flat. The S&P was flat, didn't really do anything. But we said that's a win, right? It's a win because it didn't sell off. Whereas last couple weeks ago, we had a really strong day that immediately reversed. We didn't see that yesterday, so we marked that as a win, and that gives you a good hint as to sort of what to expect going forward. And that was a great lesson because look at what happened today. Very, very strong sort of move to start the day. Now, we did pull back a little bit throughout the day, show a little weakness, maybe just a touch overbought in the short term. And so technical traders kind of looking at that saying, maybe I don't want to be all in at this point. And so if you look at the bottom right-hand side of your screen, you saw the market sell off just a little bit going into the end of the day. And so even though it bounced a little bit, still just a small gain on the day. If the market's pulled back from here, not really a big deal, in my opinion. We are less than 2.5% on the S&P from hitting new highs, okay? So you got some good news today. You had the trade talks continuing in Washington. Leave me a comment below. Do you kind of feel like the trade war, if that is solved and they come up with something, you kind of feel like that's priced in already? Don't you kind of feel like everybody's already expected this is going to work out? I worry about that a little bit. Let me know what you think below. So S&P 500, less than 2.5% from hitting a new high. I'm in the dojo, by the way. If you're one of our customers, log into the dojo. Play along with me here. You have access to all the same stuff that I do inside of here, and we're improving it, making some changes over here. You guys should see that maybe this weekend. Anyways, Nasdaq less than 2% away from hitting new all-time highs. I told you like 3 weeks ago, that's going to be the conversation in the news. If you look behind me there on the screen, on the TV, that's pretty much what they've been talking about today, how close we are from hitting new highs. It's a good thing. I have no complaints about that. So market-wise, decent little move higher, and we're getting close to those new highs. Now, getting a lot of calls from people going, Dustin, I want to switch to Jazz Wealth because my guy sucks. You know I don't badmouth people. Like if you rag on me in a comment section, if I said something wrong, I'll own up to it. But if you're just picking on me, just be nice, right? We could disagree, but I don't like picking on other companies. And I don't do many videos where I say people are bad because I know a lot of people in the industry and I really don't know a lot of bad people. So let's think about this for a second. I'm going to pull this up on the chart, but if you think your guy, wherever you're at or whatever company you're using, or maybe you're doing this yourself and you're like, I suck, I can't seem to make a profit, keep in mind that over the last year, we've essentially just kind of gone back to where we started. I actually can I zoom out that far? I can't pull up that data here, but if you go back to last January, let's say you started investing last January 2018, you're basically back to break even, maybe a tiny little profit right now. So that's what the markets have done. They had a great little run for a while. You were happy, and that guy, whoever you're working with, seemed like a great person. The market sold off. Oh no, well, these things happen, the markets fall. You probably heard that. And then it recovered all the way. 1 year, over a year, and we're basically back to break even. So just put that into perspective before, of course, I want all the business I can get, I guess. I should sort of join your argument there. But in reality, people are, they're doing you right. Merrill Lynch, for example, doesn't get to where they're at by doing people wrong. It's just the markets are sideways right now. So something you can kind of understand. I would just touch real quick on the whole Chinese U.S. trade talk thing. I'm really starting to feel like that's priced in, right? In which case, if there's a deal, if it's not spectacular and well beyond everything that everybody expected, do you kind of get the feeling that maybe people pull the the rug, right, on the markets? I don't know. It sort of feels like that. We'll keep talking about it, but bottom line, as far as the major indices are concerned, yesterday holding was the key to today, and the real lesson there, if you're following day by day, just trying to learn a little bit. I know a lot of you are long-term investors and don't need to pay attention day by day, but if you like to learn how it all works, I'm here for you. Semiconductors, by far the leaders today. 2 1/3% gain on the day. SMH is the symbol I'm using to take a look at this. You got today's move to new highs. First one to get there. Not the first one to get there, but the first obvious one to get there. And here's what happened. They say, oh, well, trade talks. That's good for all these companies that are, involved in that category. Intel, NVIDIA, QCOM, Qualcomm, or Broadcom, or whatever they call them now. And so you go, okay, great. Well, if that's what's really going on, great. That's not what's going on at all. Taiwan Semiconductors overnight. I just happen to pay attention almost 24 hours a day, so I'm just kind of watch this thing. Taiwan Semiconductors. There was a report that the leaders at TSM, that's the ticker symbol if you want to follow, they did a report similar to like if you go on CNBC here or the CEO says something. This is what happened overnight. They basically said, this is the bottom for chips. Right? That's been an issue a lot lately. You got memory, you got the chips for smartphones, a lot of weakness there, a lot of oversupply and a lot of declining demand. They said, this is the bottom. They said, it's nothing but higher from here. We're getting increased orders from our smartphone companies. Well, who can you think of as a smartphone company, right? Apple. So Apple higher on the day as well. And so because of that, everything in the semiconductor space, no matter where you want to look today, Intel did really well today, broke to new highs. I mentioned QCOM, them as well. Actually, they closed negative on the day. They started strong. NVIDIA, all these chip makers, everybody participating in that space. Well, that's the real reason they enjoyed such a good day. If you don't want to dig through the individual stocks, SMH or SOXX is one way to kind of take a look at the sector. That's where this all started from. All of those stocks got a bid from that news, meaning they got the support from that news. Either way, it's good stuff, right? We're at all new highs here. You got 30% gains on the year for semiconductors. So really good, right? Can't complain there. Moving on. You got oil. Oil basically flat, but right at this 200-day moving average. Here's the thing. Do you like oil futures? Like, do you follow this sort of thing? If you're an oil futures trader or you're paying attention, something called backwardation right now. It's just a really complicated word for a pretty simple concept. In backwardation, which is what you would see if you were looking at the oil futures contracts, the different expirations. Futures expire on mostly a monthly basis, right? Mostly. Don't hold me to that. Depends on what you're looking at. But so the front month or the current month's expiration is trading in a way where the trader who owns those contracts or the oil investors that own those contracts can get more time. They can go 3 months out in the future. I believe it's as far as 3 months now at last check. They can go out and get more time and get paid for taking more time. That's not always the case. So just think about that. You made a bet. The bet is coming due and you want more time. You're enjoying this bet. It's going well for you. You can move that bet longer in time. It's like telling a friend, give me 3 more months on this bet. They say, okay, but then they give you money to extend the bet. That's called backwardation. And so right now, it's almost a 6.5% roll. They call it a roll. So to move from the front month all the way 3 months out is about a 6.5% difference. That's not as wide as it's ever been. That's something we track here. It's not as wide as it's ever been, but that's impressive. Now, Dustin, I have no idea what you just said. Let's just bring it back to reality here. What this means is if you have oil in your supply, you're a company hanging on to barrels of oil, it behooves you to flood the market with that oil. So if you're an investor, you go, wait a minute, if they flood the market with oil, wouldn't that be weaker on the price of oil? Yes, it would. So anytime between now and 3 months out in time, that's sort of a indicator that maybe oil prices are going to stabilize or even pull back from here because the oil suppliers, the holders of the oil, the storage companies, the guys that go and drill for it, refine it, and hold on to it, they can now push it into the market if they want to and get paid for doing so. So that's my long explanation on that. I hope I didn't scare you away, but you get the idea. Backwardation is the key word. You'll probably see it more if that continues, but right now starting to spread out there. Regional banks, KRE is the symbol we'll use to look at that. We've been talking about resistance up overhead. Just as a heads up that if you're thinking about buying regional banks, the regional banks have taken a huge breath in, and they may need to just take a little bit of a break right here. I'm not saying it's bearish and that it collapses, but it's seen technically right now as a point where it could take a break, and that's what you saw start to hurt the markets midday there. If we go back to that chart where you see on the bottom hand right side of your screen, you see that weakness, go compare it to the regional banks, the large banks, your XLF, and you start seeing the selling coming in the financials first, which helps sort of pull the markets down. No real reason other than resistance, right? Just an obvious resistance area, and so totally normal and expected, be totally okay if this pulled back. The regional banks, by the way, recovered. We're up to recovering up, well, it sold off at the end of the day, but about 8% here from this 12% decline. So all these red bars that you see, let's zoom in a little bit. This is the Fed day drop, all that Fed pressure there. It's recovered about 8% of the 12% that it sold off. So not bad, right? Can't complain too much there. So those are some of the different sectors I want to point out. Home builders also poked up just a little bit. I'll use the XHB today to point that out. The 200-day moving average support still holding. Very nice little bounce off of here. I would mention maybe not the most exciting bounce. And what would that tell you? If you say, yeah, I see home builders moving higher, but it's like not waking anybody up, it's just a nice steady move higher, that would let you know that maybe this isn't as strong of a rally as you think. Check the volume on that as well. Consumer discretionary will be the last one I'll point out today. That added about 0.7% by the close there, also hitting highs as well. So a lot of good stuff going on. There's a lot of negative out there, and the best way that I can say it is if you're following the markets, the best way is to say, we were in green light mode for years, right? Little blips along the way. We are now going into sort of like a yellow light. The coast is not totally clear. The coast needs to be analyzed, right? We need to pay closer attention. I'm going to cover all of that in our class tomorrow, just so you guys know from, retail sales, auto sales, just tore that apart. By the way, the guy back there, that was our developer. That was Charlie. If you know him, it took everything he had to sit there and pretend he didn't know what was going on. He's very social, likes to talk and everything, so we thought we'd have a little fun with you, but he's not here today, so that may be the reason why you notice nobody back there. And it is a real set, by the way. Go on our Instagram. You could see how we've been building this over time here, if it's something you're interested in. Okay, let's move on to some of the stocks in the news today, and then I'll take your questions if you have any. Happy to help there. You got GameStop. Got to talk about GameStop. They reported earnings yesterday. The stock falls over 4.5% here today. Doesn't GameStop kind of remind you of Blockbuster? Like, there was no point to go get a movie anymore, and so they kind of faded away, right? GameStop, is there really a need to go buy an overpriced used video game anymore? It's sort of fading away. Now, they're up for sale, of course. If you want to buy them, they are interested. They're even, I think, offering board seats. Don't hold me to that. But they missed on earnings, mainly from a sales perspective. Very, very, very weak sales. And I'll tell you who didn't have weak sales. Dave & Buster's, man. Cool place if you ever get to go there. The stock was higher today by about 5%, sort of moving towards the upper end of this range, as I'm trying to highlight there for you. On the chart, right at the 200-day moving average, they beat earnings by 12 cents. That's a good beat. Right, it's an adjusted earnings, but they beat earnings by 12 cents. Overall restaurant sales were almost 3%. We were basically expecting 2%. So that's something interesting if you like that sort of thing. They've really been doing well lately. Lyft added 1.5% today. Like, is that much of anything? Yeah, it's a little bit higher, but if you invested in this thing, are you happy yet? No, you're not happy. If you want to short the stock, here's an interesting sort of fact for you if you like this sort of thing. If you want to short the stock, shorting stock is borrowing shares, which in turn costs you money. You pay for that. It's margin interest, right? So on Lyft, if you want to short the stock, most platforms have it, right? It's called hard to borrow, which means it's a new issue, right? There's not a lot of shares you can short. I think that changed today, by the way. However, it is the most expensive. It will cost you the most out of any large IPO in history. if you were to short today and hold for a year and everything stayed the same, you would pay 100% interest. I think it was 101.1% interest to short the stock. Is that good news or bad news? What do you think? If you're familiar with the concept of shorting, what do you think? Is that good news that it's so expensive, or is that bad news? Anyways, that's that one. Netflix. So Netflix shares were a little bit higher today, sort of waffly, a little bit back and forth. I'm not going to get into it. It's more like drama talk than anything else. The Department of Justice sent a letter to the Academy Awards going, hey, we see that rule you're about to change where you say that a company or a film can only win an Academy Award if it's been widely distributed through movies and internationally and everything. This online stuff doesn't count. Department of Justice said, hey, here's a letter, a certified letter. We'd like you to consider that rule because we think you're going to break the antitrust laws there. And if you don't know, it's all being kind of led by Steven Spielberg. He's pretty much all alone on this one here. It's a losing battle. I like the guy, but it's a losing battle there. So I'm sorry, I bounced back to the wrong charts. Woo, there we go. Tesla, a little bit higher today, 2%. They got an autonomous, what do they call it? Autonomous driving day, right? On April 19th. So that's coming out. Also, vehicle sales. I didn't see if it came out just yet. Their vehicle deliveries coming out. It should be out now if you're paying attention. I didn't get a chance to grab it. But Tesla moving back up off the 250 area. So 250, historical support for that. We've mentioned it numerous times. And so kind of interesting there if you're following along. A little technical resistance overhead. And Bitcoin a little bit higher. I don't know if you guys care to chat about Bitcoin or not, but Bitcoin was a little bit higher on the day. If you have any questions, I'm happy to go over that for you. First one I just saw there was XOP. Questions on XOP. There's a look. Price of oil has been moving higher, very clean and clear. XOP is looking like it's trying to break out from a valuation standpoint. All these companies that are inside the XOP and the OIH, by the way, they're fairly priced, right? So as far as all the earnings that have been adjusted there, a lot of these companies aren't doing great yet. That's a slow reflection in the price of oil. It takes time for them to see that. And so it's basically fairly priced. If it broke out, I think you'd see a little excitement in the short term. But for now, as an investment, it's hard to attract any of the bigger investors because all the earnings of these underlying symbols in this stock are pretty much baked in. They're baked right into the price. It's almost perfectly priced. Julian says the set looks good. I love it. Thanks, Julian. Yeah, GameStop is that's a tough one. They're pricey too, right? They're pricey. Valadia, first time live. Thanks for joining us. I love it. Kirk says, yeah, he's got 3 kids, and Dave & Buster's is too expensive. So Dave & Buster's, I'll give you that. They're not cheap. They're really smart about getting you to recharge your card too. But you know, they're killing it. People are going and spending money. Retail sales yesterday Monday. Was it Monday? Came out a little bit weak. Sporting goods continues to be the weak one there. Remember, I've been keeping you posted on that. Sporting goods continues to be the weaker side of things, and restaurants and bars are still doing mostly okay, but again, I would say caution. Yep. Hey, Dustin, any specific REIT sector you like more than others? Thanks. Well, the sort of easy answer right now is to say it doesn't matter. Right? They're all killing it. Any REIT ETF that you want to look at that's broad-based, that doesn't focus on one specific category, killing it. Our real estate fund on our website is really broadly based, everything from apartment communities to tech space, all the way to like storage spaces and everything, even data storage. So they're all doing really well right now. If you're looking at this category, I think you have to stick with the broad-based investment or trade because now you're getting where everything's maybe a little bit overpriced. So if you go trying to pick off that individual sector, you might be fighting, or individual category of the REIT sector, you may find that you're fighting a little weakness in the short term. Yep. Wandering Music says, young investors here. I love it. Get started early, right? Where do you see more value, Roth IRA or individual stocks? Well, so got a little bit to learn there, right? So that's a not really a question that makes sense. So a little bit to learn. The Roth IRA is just an account. Inside the account goes investments. Inside a Roth IRA, you can have individual stocks. Like on our website, a lot of those portfolios are made up of tons of individual stocks. When you say comparing a Roth to individual stocks, if you mean a Roth IRA compared to an individual account, which you would then hold stocks in there, I'm going to go with the Roth IRA first, always, because it has the highest tax advantage. You don't want to pay more than you have to. It sucks. Trust me. And you get older, too. It seems like the bill goes higher and higher. Yep. ExxonMobil's paying a high dividend. Yep, definitely. ExxonMobil, obviously a big, stable company there, so this falls into, maybe not into the AT&T category, but if it's something you want, the long-term stable investment, of course, ExxonMobil is a giant, right? And I mean that in the sense to say, if you had only one stock to pick, okay, things like that. Yep. Pre-owned Red Dead Redemption 2 is $49. That's part of their problem. Like, I don't know how they crawl out of it. I hope they have something up their sleeves. You want to see people do well, but I don't. Yeah, as far as GameStop, it's a tough one. Yeah, that's a tough one. Alibaba. Anything going on with Alibaba? You have earnings coming up. Actually, I don't know when. I think it's still a few weeks away, right? You got earnings coming up, and the way they left the last earnings report wasn't bad. It was a decent earnings report. The way they left it makes you go, well, why would I invest in this until I see what's happened, right? There's a lot of stocks right now like that are basing sideways because the last earnings was adjusted and they beat by a little bit, but was it really a beat, right? There's a lot of questions out there. So this next earnings announcement is going to be huge for them, not only because China is actually doing a lot better than everybody seems to report, like something we'll cover tomorrow for sure in our class, but also any concerns that we had here from the previous earnings, you're going to see that in the next report. I want to say it's like 2 or 3 weeks away. Yep. Nilesh Patel, watching your videos is becoming a daily routine. I appreciate it, man. I love it. It takes a lot of effort to put this together, but I enjoy it. Love talking about it. What stocks are not overpriced at this point? You have to do a scan for that. Start with the S&P 500. Define what you mean by overpriced. Are you talking about fundamentally or are you talking about price? Do you have a specific price in mind that you're willing to pay? Most people mean fundamentally when they're talking about that. So you could sort by PE ratio and then kind of look through the sales if you want and see what you think might increase there. It's hard to find good quality, fairly priced stocks that have room both technically and fundamentally to go. I'll give you that. It's a bit of homework, right? It's a bit of homework. You like Boeing long-term? Okay. You see the CEO, he went on a flight today where they tested the new software. He went in there. That was a good photo op, right? It was really, really smart, in my opinion. Hey, go on the plane as the CEO, take a picture, and be like, see, safe. But I think we're coming to a resolution on that. Yep. I think so. We'll see. Any idea about Disney long-term? Well, this depends on your view of the overall economy, right? Disney and also what you think long-term is. Disney going back to last summer, well, we can just do it. Disney going back to last summer, I believe, is pretty much flat. It is pretty much flat. I know they've been working on acquisitions and everything, but really no real performance. Long-term, I think that's good. I can tell you from experience, being right next to the parks here, that they're busy as can be. I know that's not their only revenue driver, but wow, stupid busy down here at these parks. They've got a lot going on. So from a long-term perspective, to me, I wouldn't mind a discount. I'm not saying like, buy it on a dip or anything, but I think there's room for it to be discounted. Yep. How much insurance was on the CEO of Boeing today? Yeah, I'm sure he checked his policy first. No, that's funny. Peter says, how do you cash out an investment IRA? Okay, can you do a video on the difference between a bank IRA and an investment IRA? Everything I found online talks about investment IRAs. Bank IRAs and I don't know what investment IRA is, but bank IRAs, any IRA is the same in terms of the rules. So a traditional IRA with us or with your bank or yourself doing it at any brokerage firm has the same rules. The warning, the caveat, and I don't use that word, I think that's a tricky word, but the warning here would be in a bank IRA, they may have put you in CDs. And so because of that, you may have a time period you have to wait to cash those out until they mature. But if not, the rules are the same. There's no difference. Peter, they're the same vehicle. you may just be seeing people refer to them as bank IRAs, and I'm not sure why they would do that. It just makes it confusing. Cool. Perky Cloud's wondering if it's too late to buy the S&P 500 or the SPY more particularly. I'll go back to what I said at the beginning of this video. Don't you kind of feel like they priced in the trade war resolution? Doesn't it just feel that way? So if you get to the highs, what do we got, right? Even if we get to the highs and they say, we solved our problem, shake hands with the Chinese, everything's good, maybe that's a temporary boost, but I worry that that's something where you buy into it and find out that probably wasn't the best buy. I can't give you advice on specifically when to buy or sell, just not allowed to. By the way, the video I'm going to do tomorrow, that posts tomorrow, about dividend investing, I'm going to use stats. I'm going to actually show performance of popular dividend mutual funds and growth mutual funds and try to make a discussion out of it. I'm sorry, you can bash me all you want. I'm not allowed to say the names of the funds. So just know they're not ours. I'm going to use 3 of the most popular funds out there. You'll be able to find them easily. I can't say their names or I will get in trouble. Compliance said no. And I hate that sometimes because I want to give you the information. I'm just not allowed to make the recommendation. So heads up for that. If you're one of our customers, of course, I can just tell you. That's it. All right, one more question and we'll wrap it up. What do you think about Siri? So typically or historically, a very, very tough stock to trade. It's a very slow mover. It's very difficult to get an entry that people will stick with from a short-term perspective. Long-term perspective, it's sort of out of favor right now. You might like that, right? Daniel might say, hey, that's what I like. I like out of favor stocks, in which case you're buying the dip there. There's obviously really no competition. And we'll see what their earnings have to say, but that's a tough one. It's a tough, slow stock. I get it. It's cheap. It's interesting, but that is historically a tough one to trade and a very slow mover. So that's all I got on that. Hey, if you're one of our customers, tomorrow night we're going to do the market overview. I promise you. You've never seen anything like it. I'm not saying that because I'm teasing everybody else. I'm saying that because remember Mr. Charlie sitting there and everything? We're putting together all kinds of data for you in a simple way. Like, that's my goal. Just keep it really simple so you guys can get a clear picture, go share with your friends, hey, this is what's going on, and sound intelligent and informed. We're a teaching financial advisory firm, so we'll handle your investments, but then we want you to learn, right? We want to just quickly learn how things work. We're going to cover it tomorrow, and it'll also be recorded and in the dojo if you want to check it out later. You don't have to join us live. Enjoy the rest of your day. I appreciate it. Remember, you don't have to agree with me in things that I say. Just be nice, man. I'm here being nice. Be nice. See you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.